Hey guys, it's September 30th, 2013, and today I want to do a recap. It's Monday, so hope you're trading well on this week, and we're going to recap Facebook, Apple, and Tesla. So I talked about these stocks the last week or so, and we'll start with Facebook over here that we have going on. And you notice this stock has been doing pretty well, and I've been talking about it the last couple of weeks. So hope you got in it at the right time, at the doing the right thing. So over here it did the stair-step pattern, as I've talked before about that. And then, coming back over here, we got this little gap that's happened. So let me circle that for you right over here. So this little gap over here happened on from the 23rd to the 24th. So slight little gap, nothing major, but usually gaps get filled. So let me put that right there. So okay, so we have this gap right here, and this is the region that we're working on. And it's possible that gaps do get filled, but as I always mention, remember to trade the trade and not always the market. Well, what a lot of people do is zooming in here on the 30-minute is they'll trade the market and they'll start looking for what direction is the stock going to go, and they wake up with their mornings thinking of the direction, the direction, the direction. And I don't want you to think about that too much of the direction. I want you to think more along the lines of managing your trade and managing your risk. And there will be days where, okay, let's just say you got in this after a gap that moved nicely for you, where, okay, every day you're up, let's just say $1,000, $1,000, $1,000, $1,000. And then you have one of these days, because you've had a lot of positive days, that you're down maybe $600, $700 for that day, rather than being up $1,000 every day. You're down $600 or $700 today. And a lot of people, this psychs them out. The psychology behind it, it really psychs them out. And you can't let it get to you, because it's about managing the trade. In general, if you've been up, 3 times $1,000, you're up $3,000. And now if you're down 600, now you're at $2,400 profit. So what? So what? You're still up. But with that being said, you have to still have some sort of stop in place or some sort of risk management in place. Don't ride it back down all the way to here if your stop is up here. Now, if you got in it a lot earlier, let's just say you got in it over here when I was talking about it at this 40 level, then hey, it fills the gap, no big deal. It tests the gap, no big deal. If it comes down here to this 45 level, no big deal. You may be adding to it, if it goes there. So you have to kind of manage your trade and manage it according to your plan. Don't manage it according to other people's plan. People are out there, they're tweeting, they're talking, they're usually just putting out their news. And that's kind of what happens with my daily recap, is the daily recaps are a little bit of news. They're a little bit of insight of what's happening. So it gives you a little bit of an alert. It's not to say that, hey, this is how you need to manage your trades. It's more of watch out for this. This is what's happening. So if you got into the trade, let's just say at $40, and now you're hearing, oh, gap might be filled at 47, then you might not need to worry about it, because if your stop is at $45 because you got into that 40, then that's fine. Then don't stress about it. On the other hand, on the flip side, if you got in it at, let's just say, $49, and then you took some profits earlier and your stop was at, let's say, $50 or $50, then by now you should have been out because your stop was hit. If not, and you lowered, or you had your stop at 49, let's say 73, then be careful of your stop, because it may get hit very shortly. Okay, so you need to stick to your stops and stick to your trading rules. If you're doing spreads and you're doing monthly income trades, that's a whole different ballgame. But I'm talking about directional speculative moves, and right here you need to stick to your stops and stick to your game. So if you got in it, let's just say at 48.70, right around here, 48.70, maybe on the 25th, maybe on the 24th, you got in it right around there, and the stock's moving down, and you set your stop at 48.33 or maybe even 48.23, then you need to watch out, because this stock might be heading down lower. Now, of course, can it bounce off right here before it fills the gap? Yeah, of course. And that's why I always say manage the trade. Don't just watch the direction. Manage the trade. That's the key. So as far as what I'm seeing here for me, don't worry about me too much. I'm over here watching it, and it may fill this gap, and it's quite possible. Looking at the volume though, however, it's a little bit lighter when it's moving to the downside. So I'm watching it over here, and then I'm watching it here. It looks like a little bit lighter, but it may still fill the gap, because according to the market right here, looking at the last few days, it's been going down negative. It's moving to the downside. So as far as looking at Facebook, not everything moves with the market. But the volume on the other side has not been anything heavy to the downside. So has it been heavy? No, it hasn't been super heavy. The heavier volume is more to the upside, but you can see a gap fill. So just something to be aware of. In either case, looking at Tesla, again, making new highs here on the daily. You can see it. It's been running well, and look at this power stock right here. From 110 to 193 all the way there. And if you got in it over here even at 46, my God, congratulations. But in either case, again, if you're trading this one, let's just say on the 30-minute, over just the last few days, let's say, from the 26th on to today, again, you've had multiple stair-step patterns. And today, again, it reached and made new highs. And here, volume to the upside. And again, set your stop. And if you set it to 190 or right here, then, you should be okay. If you've set it a little bit lower, then again, okay. But trade the trade. Trade what you got. If you got in it earlier over here at 187, then by all means, you're in fantastic shape. If you got in it today, right now, then of course you have to watch your stop a little more closely. Okay, so, and looking at Apple as a final thing, a lot of people thought this one was going up. Didn't appear to be. We had a few definite gaps over here. Let me see if I can rotate it. We had one here. We had another one over here. We had another one right over here. I mean, this thing is gapping all over the place, so it looks like a crooked tooth something. So in either case, this one's been gapping everywhere, and it's filling these gaps right now. That's what it's doing. It's filling this gap right here. It didn't make it to even 500, didn't even touch the 500 mark. So it definitely exhausted its way up. This was the exhaustion gaps, multiple of them. Exhaustion gap up, and it's just dying out right now. Now volume, nothing amazing to the downside, so it's not heavy, but it's rolled over for sure over the last few days. This day right here on 9/24, I wasn't sure if this was just a regular pullback day because the volume was light, and then it could have headed higher. But the second day follow through, and then the third day indecision, it's kind of rolled over. It showed its hand at the moment, and it showed its hand over here when it gapped down right in this region right here. So that's really where it showed its hand because of the volume. And here was nothing but a bear run now seeing it. So this is how you look at the charts. This is how you spot things. You really can't, just like in the stock patterns where you have the accumulation, the markup phase, the distribution, and the markdown phase. Just like in those phases and stages, you don't know what the phase is until it's really ending or over. Realistically, you don't know till it's done. Now here with Apple, again, we didn't know until probably about the last few trading days or so. But right now it didn't pull higher, it didn't move higher beyond this 506 level, and so the stock isn't that strong. It hasn't been too strong lately. So right now it's still moving to the downside, and it probably will fill this 465, 459 level. May even come down here to 447. Who knows? Again, like I say, trade the trade and not so much the market. Of course, you want to look and see where things are going, how they're acting, and you got to manage your trade. But beyond that, trade the trade and not so much the market. And I have a video about that, so if you missed that video about trading the trade and not the market, then go ahead and check it out. In either case, that's what I saw regarding the Facebook. It's, you know, possibly might fill that gap. The Tesla still holding strong. Again, stick to your stops, stick to your rules. And Apple. So there you have it. There's kind of the recap. Apple's not pulling up right now. There it goes. And Apple, all these gaps all over the place. And, you know, looking at the Dow, again, moving down, perfect, creates great opportunities later for buying stocks, buying opportunities, and it sets up new chart patterns. So just be patient. Just don't ride it on the way down. All right, that's all you get for today. Enjoy the day. Make it wonderful, and trade them well.